Hi, my name is Drew Farrell. I'm the Senior Vice President of Symetra in the Retirement Division. And I'm joined by Dave Kansas. We're fortunate to have Dave as a consulting partner to talk about all things financial services, the sector, behavioral finance, marketplace. Dave is a gifted journalist who has a long career in both being an editor with the Wall Street Journal, TheStreet.com, and he's actually been commissioned by Dow Jones to write a number of different books on financial literacy. Welcome, Dave. I look forward to our discussion.
You bet.
Let's stay on consumer to a certain point, but the newsreels, everyone, reads, sees everything about inflation, and you mentioned pending recession, if and when that would happen, and then GDP. The public's perception, what do they get right? Talk a little bit about those three things in terms of what they're seeing on television, what they're reading in the paper, and what reality is at this current time.
Well, one thing that's important to remember is that most folks are pretty busy, that they don't have a lot of time to kind of read deeply or watch a lot of activity about.
So it's the flash that they're responding.
Well, exactly. They respond really in their real life, right? So when we talked about inflation over the last couple of years, we talked a lot about egg prices, right? We didn't talk about the CPI was up 2.7 or 8% or whatever it was. We talked about the price of a product and people feeling sticker shock. So the big debate that's been, that's going to be with us for some time is about tariffs. So how do tariffs play out, not just in the broader economy, but for consumers who are seeing what might be happening when they buy things? So for instance, if tariffs raise the price of lumber, American companies are going to match whatever that higher price is, and they're going to feel like things are more expensive with the tariffed lumber. Also, with tariffs, a lot of the things we buy in grocery stores, for instance, are grown all over the world. The apple season, as great as it is not 365 days a year. So when you get an apple in January, it's probably coming from somewhere else. So how those tariffs play off for the everyday activity of the consumers, I think how sentiment will be impacted. And we still haven't really seen it play out fully. There's been some data that shows producer prices, which is the prices that companies charge each other for wholesale activity, have been elevated. Consumer prices, not so much. You just had this giant, there's been a lot of revisions of the jobs numbers, the monthly jobs numbers, and it looks like we've had a lot fewer jobs than people thought we would have. That also has an impact on sentiment because, it's one thing to face an expensive egg carton. It's another thing not to have a paycheck. So those are some of the ways that people kind of approach figuring out what's really going on.
In your opinion, are consumers, is the public, are we numb from all the talk on tariffs? The stop, start, the delay, the imminent threat, but no, now we're going to hold back on tariffs and wait and see what happens. It seems as if, not to lead the witness here, Dave, that it was a big deal that people were genuinely concerned about up front, but now it's just an ever-present topic of if and when things happen, depending upon the country, depending upon the impact, things along those lines.
I think the discussion of tariffs, which has been throughout the Trump administration, is something he has talked about for decades. This is an issue that, for a variety of reasons, has always been important to him personally, and when as president, he's made it a big part of his administration's plans. And it's not, if you look back to April of 2025, there was a lot of volatility in the stock markets based on how the tariff news was unfolding, how it was being discussed, how it was being announced from the White House.
Exactly.
And that quickly got recovered from. Markets, marched higher pretty quickly after that rickety 4 or 5 week period. And I think the fact is that it's going to take a while to figure out what these tariffs really mean for the broader economy. You still would say have the vast majority or a significant number of influential economists who still think tariffs are not good. You have a smaller group that is getting more confident, saying, well, we think maybe there is something smart about this that will work better than others believe it will. It's still a lot of unknown, still a lot of trying to see where it'll play out. how it would impact inflation, how to impact the consumer experience, how it'll impact manufacturing, say in the United States. One of the things that's interesting that hasn't gotten a whole lot of attention is a number of countries that are paying tariffs in the US are not retaliating in kind. They are kind of keeping their powder dry in their own home markets, which probably is ultimately a plus for global trade,
Okay.
but people are not. That's something to watch, I think, to see, do we go from tariffs to kind of quietness or tariffs to much more active trade debate and bitterness that, is more familiar, say, in the 1920s and 1930s than it has been today.
Understood.
And those were not good years for investing, by the way.
No, no. Dave, thanks for the conversation. We appreciate your partnership and you and your contributions.